The market's had a strong reversal over the last couple weeks. The McMuffin signal that implied we'd have more upside. However, the strongest feature of candlestick analysis is it allows you to see exactly what's happening in current investor sentiment. So yesterday, when the Dow closed lower, it did a bearish Harami. Didn't change the effect of the uptrend because it was still above the T-line. However, today's gap down through the T-line and closing lower immediately tells you this uptrend is over, that the sellers are back in. So candlestick analysis gives you an idea of what's going on in investor sentiment, whether it's bullish or whether it's turned bearish again. In this case, the assumption is with the close back below the T-line, we're back in a downtrend. Now you can make your assessments. Is it coming back down to fill the gap? Is it doing what we call a stutter step? Means it pulls back and then does another buy signal, not quite a double bottom, but close to it. Or it could be coming all the way back down to test this level. How do you know which one it is? Merely by witnessing if they're pulling back, when is the next buy signal? The same assessment can be applied to the NASDAQ, a doji Harami gap down, still implying there could be more downside. Now that was telling you exactly what the reaction was when the press conferences on the virus was saying that the possibility of 100 to 200,000 deaths in the United States was not going to be very favorably accepted by investors. They started selling. Now you can go back and find which sectors are likely to sell off if everybody anticipates that things are going to be closed down for a lot longer. For example, the retail stores are probably going to be hit hard. As in Kohl's, you can see that failed here at the T-line, started back down, gap down today. If it opens lower, putting you into the next wave, you've got a lot more downside. And the airlines, as we can see in Delta, very indecisive trading, and today did a doji gap down, also implying the downtrend is still in progress with the airlines. And quite a few of the REITs that had popped up have reversed. Things like SPG did this bearish J-hook pattern setup, also can be shorted on weakness. So on a portfolio with the T-line or the indexes closing below the T-line, the assumption is that you probably want to be looking at charts that are going bearish at this point. On the other hand, anything that has to do with the virus medical supply, our recommendation on APT the other day was based upon the Morningstar signal coming off the 50-day moving average. It gapped up. It did what we call a double doji. Notice how the pullback after an indecisive trading day was another indecisive trading day, which merely tells you that the pullback isn't very forceful. It's probably profit taking. And there's a very simple entry point for a double doji setup. If it opens positive, it's more than likely going to trade positive. As you can see, there was a big move today, up approximately 40%, being in the right stocks at the right time. That becomes an alert for other stocks in that sector, such as Lake, bullish engulfing, bouncing off the 50. Positive trading tomorrow kind of breaks this downtrend. And that related to supplying medical equipment for the hospitals makes this at least a bullish position to be put in the portfolio when you might have a majority of your other trades bearish. That'll be it. We'll see you in the chat rooms.